I mean, it's not primarily about documentation, really. What Europe is trying to do here is to erect old-fashioned trade barriers for the reasons that you always erect trade barriers, that it doesn't want to be dependent on an overseas supplier. It wants to develop a domestic capability. So they're not sort of banging the shutter down on the 1st of January, because the people who that would hurt most are existing European corporates who are financed out of London. What they want to do going forward, and there are a lot of sort of interim time-limited measures that have been put in place. So what they're trying to do is to say, we're not trying to upset your existing transactions so much. We're trying to force you out of the market over time in order to see whether a domestic capability in Europe can be created in order to fill that gap.
Simon, you note that the downside for the UK is its restless regulator problem.
Yeah.
What can you describe for us what you mean by this and what this means for the outlook for financial regulation here in the UK post-Brexit?
Certainly. The UK regulator has been a fountain of new regulatory ideas, most of which up until now have been implemented at the European level. That is now going to stop. So the question becomes, how fast does the UK diverge from Europe? And certainly if you talk to people in the industry, their concern is not that the UK will deregulate, but that the creative energy within the UK regulators, unchained by Europe, is going to create a sort of increasing flurry of new regulatory ideas. And the concern is that could just make the UK a very awkward place to do financial business, which is kind of the opposite of what we're trying to achieve.
Simon, one of the drawbacks or the criticisms of the European regulatory system in general has been the new MiFID II regulations that came into effect a couple of years ago, and this has been a deterrent for international banks and international investment funds. Do you see scope for the UK to deviate from those rules when they're out on their own, making their own rules in the future?
Yes, absolutely. But you have to remember that most of what was in MiFID II was put there by the UK regulator. I mean, there's no doubt that a lot of MiFID II has, to put it very politely, not delivered on what it was intended to achieve. But that doesn't always mean that it will be rapidly rolled back. So there's a chance to make the markets much more efficient by taking out some of the more unsuccessful bits of MiFID II. But the question of whether that will actually happen is a difficult one.